Good evening, friends. Welcome to the next virtual coaching class organized by Board of Studies, ICAI. Today's evening, we are going to talk on this topic called import and export under GST law. So this is one topic which is most of the students feel that there is a lot of dryness in this subject, import and export under GST. First and foremost, 95% of the students, they say, so we don't have experience or exposure in this area called indirect taxation. At best, when you ask what you have learned in GST, filing of returns under GST law or getting a registration under GST law. This is a general answer we hear, especially when you come into this particular area called import and export under GST. Many of us, including the qualified chartered accountants, have a lot of dryness. Now, I'll try to make this paper, this particular topic, as simple as possible and as lively as possible with decent examples for you to understand. Students, please keep in mind, I'll try to make the concepts clear for you to use them for your practice point of view. Examination point of view, what problems they are going to ask, what particular topics they are going to test you, that I'll have a coverage on. But my suggestion is read the subject for the sake of understanding how and where I can use in my career point of view. So this topic called import and export under GST, it simplifies to you to say what do you understand by import of goods, what do you understand by import of services. Now, we had decent sessions covered till now where we have discussed what do you mean by a supply? How do you bifurcate goods or services under GST law? You have read section 7, which deals with your supply. You have read schedule 1 of CGST law, where though there is no consideration, a supply can take place in relation to a related party or distinct persons. We have read schedule number 2, which talks about bifurcation of a supply into goods, into services. This is also we have studied. Now, this session, this topic is trying to teach you what do you understand by import. How do you interpret this term called import? So for this particular thing, we need to draw a couple of definitions. We need to draw a couple of our provisions from the customs law. At the same time, when we talk about exports under GST law, we had a couple of discussions in the last session. Those discussions we are going to have a recap in relation to exports under GST law. So today we will start with our basic definitions. There are a couple of definitions which are very, very key backbone or important for us to understand this term called import or export. Now friends, this particular definitions, Institute Material has given a decent coverage. We have to fall back to Customs Act 1962. We also have to fall back to IGST law. So what we have done, we have touched upon customs law to some extent. I repeat, we have touched upon our customs law only to some extent to draw couple of interpretations, couple of provisions dealing with your import provisions. We have a third module which deals with your imports and customs under GST law, all aspects with respect to finding what is the valuation. How do you determine what is the point in time when we need to import the material? All those aspects we will deal with my customs law. So as of today, we will only start with a couple of definitions which have been borrowed from the Customs Act. I will give you a couple of examples for you to understand the relevance of this particular topic and how we need to look for applying this concept of import or export under GST law. As and when the relevant topic is there, I'll give you a couple of examples for easy of understanding. Now, the provisions under IGST law. Friends, I would recommend you keep your working note, you keep your institute material handy with you. You have this institute material, so please keep this institute material as a handy for you for ease of reference. Reason, couple of provisions are there where we have to interlink the definitions, time of supply provisions, place of supply provisions. I repeat, definitions, time of supply, place of supply. Among these three, place of supply. There's one provision called place of supply. Very, very important. Since it is already discussed at length by the previous faculty, I'll not focus on place of supply provisions in depth. I'll just touch upon and I'll come out of that particular provisions. Now, in the process of our discussion, we will see what is import of goods, what is import of services, understanding our zero rated supplies. Finally, we will see a couple of examples to test our knowledge on these discussions. Now, in the last session, we have discussed something on refund process under GST law. What we did, we have started understanding what do you mean by refund, what is the process of filing a refund application, which all aspects I can claim a refund under GST law. And we have also understood a couple of the procedure and equation in relation to our refund under GST law. So what I felt, let me take a couple of examples on problems revolving inverted duty structure, on problems revolving your accumulated input tax credit, which is in relation to zero rated supply. I'll take a couple of problems so that you can understand this particular problem better, this particular topic for your examination point of view. Now, let me come to my Excel file. Please confirm you are able to see my Excel file. Friends, hope you are able to see my Excel file. Yeah. So refund under GST law, I'll start with one particular problem in relation to inverted duty structure. Now, before I start with this topic, let me recap. There are a couple of questions asked by a couple of your friends, Jatin and Ambika, I believe. There are a couple of questions which were not answered in the last session in relation to zero rated supply and exempt supply. I believe this question was asked by Jatin. I'll try to answer that particular question in the process of our today's discussion. Thanks for confirming, Raman. We will start our discussion today. First and foremost, inverted duty structure. I'll give you particulars, then assessable value, I'll say rate of tax. Now, let me enlarge this cell so that you can understand well. Then tax thereof. Okay. Serial number. Now, first and foremost, let me say supply of goods supply of goods at the rate supply of goods which are inverted duty. No refund permissible. My rate of tax, say 5%. Value of supply, say 10 lakh. Now, say I have supplied goods worth 10 lakh. I have supplied goods worth 10 lakh. The rate of tax on that particular supply is 5%. The government says, though this particular supply is at an inverted duty structure, refund is not permissible. I'll give an example for you to understand this particular provision. Textile is one industry where Government of India says generally the rate of tax applicable for textile is 5%. The government says if you are into the business of manufacturing of textile, then though you have a inverted duty structure, you are not entitled for filing a refund application under Section 54. So why is that this industry has been not given a mechanism to encash their refund? There is a policy which is formulated by ministry. So couple of industry or couple of supplies, though you are under inverted duty structure, you shall not be entitled for payment of tax. So what is tax I have paid on my outward? So this is my tax I have paid. Now next. Second, export of services. Export of services with payment of without payment of IGST. Say rate of tax is 18%, and I have exported services worth 25 lakh. Now, tax upon that 0. Reason, I have exported services without payment of IGST under LUT or bond. Last class we had a discussion. What do you mean by LUT? What do you mean by bond? For benefit of other students who have missed or you want to recap this concept, letter of undertaking or bond, this is one mechanism where government says when you want to export, let me have a confirmation from you. That means you as a registered person, you will give an undertaking to the jurisdictional commissioner stating that the relevant terms and conditions for you to export without payment of tax should have been complied. In relation to goods, the law says that within a period of 90 days from the date of invoice, they have given further 15 days extension. My date of invoice within a period of 90 days. If my date of invoice is 5th August, from 5th August within a period of 90 days, they have given additionally 15 days margin. So 90 days plus 15 additional gross days, you should have exported the goods out of India, right? In case of services, you have to ensure that within a period of 1 year, 15 days from the end of 1 year, you get a money in convertible foreign currency. So if you fail with any of those provisions, the government says, I'm going to cancel your letter of undertaking. So why is this concept of letter of undertaking or a bond? Government felt, let there be a self-regulation. It is not practically possible for halting the business for sake of this procedural aspects. So let me put the responsibility on the supplier of goods or supplier of services to ensure repatriation of money, to ensure exporting of the goods within the stipulated point in time. Government says ease of doing business, don't come to my office every now and then. Under central excise, whenever there is a exports, there is a prerequisite of obtaining a LUT. Now there is a concept of bond or LUT. I'll come to that later. But manually I have to give a declaration undertaking with my commissioner's office. Now this was felt more cumbersome. That's why they made electronic. So it's a simple mechanism. I being a registered person, I log into my GST portal. I fill a basic form called LUT. The moment I submit that form, there is an automatic acknowledgement number generated, ARN, application reference number. There is something called ARN. Now, what happens here? As a registered person, when I file an application, it is a simple process. No need to give any documents. You need to say, you want to export the goods or services. I comply with so-and-so terms and conditions under the specified laws, and then I submit my application. Now, government says, if you are a registered person, assuming that you have undergone through a process of IPC provisions where there is a confiscation of tax payment, and if the tax evasion is more than 2.5 crore or 250 lakhs, I repeat, if you're an assessee where there is a tax evasion to the extent of tune of 250 lakhs, and there is a settlement, if there is a compounding of an offense, if there is a settlement commission through which you got that issue resolved, then they say you are the person, you have to execute a bond. What is a bond? I give a bank guarantee. I go to a banker, seek for a guarantee. That bank guarantee, by virtue of a bond, I give it to the authority concerned. So please keep in mind, as of today, only those people who have violated, where there is a confiscation or there is a compounding of an offense having a value more than 250 lakhs, you have to give a bond. But for that particular compounding, rest all are permissible to execute something called LUT, letter of undertaking. So here I export the services under a LUT or bond. Third, I have a supply of goods domestic with payment of tax. Say the rate of tax is 12%, or say 18%. And the value of goods is say 45 lakhs. Now, I have one category, 10 lakhs, which is meant for inverted duty, but government clearly said, look, this particular nature of business, I'm not going to give you a refund. Second category, export with LUT or bond, which is a service category. Third, there is a supply which happened domestic market. So this multiplied by this, I get my tax payment. So friends, what I have captured here, my outward supply during a period and the taxes paid or payable during that period. Now I give one more entry called supply of goods attracting inverted duty structure. Say my inverted duty structure is 12% and the value of goods I have supplied is 20 lakhs. Now how much is the tax I have paid? So this into this is my tax paid, right? Now examination, a 4 marks problem can be expected from compute the inverted duty structure, compute the refund eligible under this category called inverted duty structure. Now, I have examined something called exports happened during a relevant period. I repeat, I have examined the transactions of outward supply which are identified towards taxable domestically, taxable exports, and taxable under inverted duty structure. So what I have done, I have calculated that during a particular month, during particular period, my total value of supplies and total value of tax payment is this. So I'll put it as total. Now, total supplies during the month is 1 crore. I repeat, my total supplies during the particular tax period is 1 crore. Now, assuming my input tax credit, input services, capital goods. For ease of understanding, I'm just putting under one head. Friends, for ease of understanding, I'm putting all CGST, SGST under one head. Give attention to that. Say my inputs is 12 lakh. My inputs is 12 lakhs. My input service is 5 lakh. And say my capital goods is 85,000. So what would be my total? Right? Now, for advantage of students who have come late, for people who are not able to understand, let me recap once again. We have captured the details of supply during a period. We have also captured what is the input tax during that particular month. So here I have category 1, I have category 2. I have category 1, I have category 2. Both my serial number 1, this is a supply where 5% is a inverted duty structure, but government specifically say no, you are not entitled for refund on this particular, supply. You have category 2. There is an inverted duty structure, the rate of tax is 12%. So this category number 2, which is having a turnover of 20 lakhs, this is a turnover on which I have paid a tax of rupees 2,40,000. Now, please keep in mind, problem, they'll give you one particular category, though it is a lower rate of tax, there will be somewhere in a note or explanation, they will say, for this particular category, there is a restriction by government not to claim any refund. Now, why? It is a policy decision. Now, before we proceed further, one question to you. I have inputs, I have input services, I have capital goods. My category is inverted duty structure. My category is inverted duty structure. So please confirm, can I claim refund on inputs, input services and capital goods, all the three, or only inputs and capital goods, or inputs alone? I repeat my question. When I think of claiming a refund of input tax credit in relation to inverted duty structure, can I claim a refund? Can I claim a refund on all the three inputs, input services, capital goods, or only inputs and capital goods, or inputs alone? What would be your answer? Let me see your answer, then we go further. What would be answer? For the computation of my eligibility of refund under inverted duty structure, should I consider input services, capital goods, or only inputs in capital goods, or only capital goods, or only inputs? What would be your answer? Please confirm. Raman says inputs alone. Okay. Others, any different view? Nitin says inputs and capital goods. Okay. Inputs alone. Yes. Right. So only inputs. Yes, Ambika, you're also right. So friends, when I do the calculation under my GST law, section 54, they give me a refund. Only on inputs, only one category called inputs. Rest all, I wouldn't be entitled for claiming a refund, right? Now, what is the formula for me? My formula is turnover of inverted duty structure right? This divided by adjusted turnover. This multiplied by input tax credit minus tax paid on outward supply. Let me put the minus symbol here. So friends, what they say, what is your inverted duty structure? What is your turnover? Numerator is your that portion of supply which is under inverted duty, numerator. My denominator is your adjusted turnover. That means all the turnover during that particular tax period, multiplied by my input tax credit claim, whatever inputs is there, that particular input tax credit, less what is the tax you have paid on that particular outward supply. So friends, here my numerator, my denominator, and my input ITC. So here, if you see, my numerator shall be the turnover on which inverted duty structure is there. So my turnover of 20 lakhs. I repeat, 20 lakhs is my turnover which is under inverted duty structure. That is my numerator. My denominator is adjusted turnover. That is your total supplies made during the tax period, right? And what is your input tax credit? My input tax credit is 12 lakhs. As a couple of you have confirmed, like Jitin, Venkat, Ambika, I have confirmed. This is only inputs and not others per se. Yes, ma'am. So my IT says 12 lakhs. And my output tax already I've paid, I've calculated, it is 2,40,000. So let's go ahead and apply the formula. I'll say my numerator by denominator into my input. This is my result minus my tax paid is 2,40,000. Now 2,40,000, I get a result of 2,40,000. My output tax paid is also 2,40,000. You can see the problem. I have paid output tax 2,40,000, and when I do the calculation, my result is 2,40,000. My output tax, this is my result, and my output tax paid is also 2,40,000. Now government says since here 240 minus 240, I get a result of 0. Government says, look, you're not entitled to file any refund application. Reason, whatever input tax is there, that has been utilized for the purpose of any other goods during that particular tax period. Since your turnover is equivalent to this particular money, whatever taxes you paid on your inputs was used or utilized for any other category, you are not entitled to claim any refund on this particular category. Now, what if I change slightly my rate of tax? If I change my rate of tax from 12% to say 5%, if I've changed my rate of tax from 12% to 5%, let me see the answer. Now you can see the result 2,40,000 remains as it is. My output tax happens to be 1 lakh. Whereby I get a refund of 240 minus 1 lakh. 1,40,000 is a refund eligible. Now, so how is it possible? Earlier, when I have kept my rate of taxes at 12%, if I assume that my rate of tax is 12%, you have seen that I'm not entitled for any refund. The moment I changed the rate of tax from 12% to 5%, when I changed my rate of tax from 12% to 5%, you can see that from 2,40,000, if I take out my output tax paid, I'm getting eligibility for 1,40,000. Now, is there a golmaal in this? Is there any problem with this? Answer is very simple. Government is smart. Lawmaker is also smart enough. They say, I'll examine your purchases. I'll examine your sales. Assuming your average purchases is 12% or 15%, I'll give you benefit of only that much. I cannot go one-to-one component. Example of this Ashok Leland, the other day we were discussing, when I purchase a chassis, 28% is the rate of tax. When I buy a steel, 18% is the rate of tax. When I apply a paint, 28% is the rate of tax, like water tank manufacturing is. I was giving example of water tank manufacturing activity, water tank, where chassis is 28%, steel is 18%, paints which I apply is again 28%. What is the outcome I manufacture? Water tank. And this water tank is subjected to 12% rate of tax. So friends, here government wants to really give you a benefit of refund when your average rate of purchase is little above your average rate of output. Only when you meet this criteria, you are entitled for. Otherwise, you are not entitled for claiming a refund. So this is one model which is in relation to your inverted duty structure. Hope I have explained this concept with the problem. Let me see if there are any doubts till now. Now, there is a question from Ambika. What if for inverted duty turnover, both inputs of higher rate? What if for inverted duty turnover, both inputs of higher rate? If my input is a higher rate, I'll get more refund, Ambika. I got your point. My inverted duty turnover is at say 5%. My output is 12%, or sorry, input is 12% or input is 8%. I'll get a more refund in relation to that proportion. There's a question from Ambika. What if inverted duty turnover, both inputs of higher rate? If I have more higher rate of inputs, the more I'll be entitled for claiming a refund. To justify your question, Ambika, I'll put the same example here. You can see here, Ambika, I'll put this example this way. Now, assuming this is my inwards and my outward. Now, say my value of purchase and IT input, say ITC. My value of purchase, chassis I have purchased for say 12 lakhs. Steel I have purchased for another say 4,50,000. Paints I have purchased for some 85,000. Now, this is my value of purchase. Let me calculate my input tax credit. Now, this is my total value of purchase. Friends, this is my total value of purchase. Say I am in a business model where my profit margin is 10%. On 17,35,000, I keep a markup of 10%. So what happens here? Let me capture my output tax here. My sale value and tax thereupon. Now, my sale value happens to be 17,35,000 plus 1,73,000. That is your 19,08,500. On my purchase, I had a profit margin of 10%, and my total sale value happens to be 19 lakh. And I'm going to pay my output tax of 12%, right? This is my tax for the month. Now, my purchase input tax credit is 4,40,000. My tax paid on outward supply is 2,29,000. For one item of water tank, what I manufacture, I repeat, for every unit of water tank I manufacture, my cost is going to be 17 lakhs. My sale value is 19 lakhs. I have my turnover higher than my purchase. Department cannot say you are cheating or you are hiding anything. So my value is 17 lakhs. I'm selling it 19 lakhs. All along I have a profit. But if you see here, my ITC, which is getting accumulated, is to the extent of 2,11,000 per unit. This is my ITC accumulation per unit. So what government says, if you are only having this business activity, your entire turnover, numerator and denominator is going to be one and the same. So your ITC inputs minus tax paid on output, that difference is nothing but your refund which you are entitled for. So this is one example, Ambika, in relation to the question which you have posted. Hope I have clarified your doubt, Ambika. Then there's one question from Raman. Can we get inputs of all items for refund, or we have to exclude some inputs? Good question. Raman has a question here. So when you're doing this calculation of refund, are you entitled for the amount which you are calculating as refund, or are there some items which we need to exclude? So Raman, there's a declaration and undertaking along with refund now. Question from Raman is, sir, when you're filing this refund application, are you eligible for input tax credit? Whatever input you have taken, are you eligible for claiming a refund of this, or will there be a deduction from that? Now, to answer this question, I'll explain this way. along with my refund application, I, as a registered person, I'll give a undertaking or a declaration to the government authority. Whatever input tax credit I have taken, that is an input tax credit for me eligible under the law. So when I say I'm eligible, my section 16, my section 17, read with rule 42 and 43. Raman, if you're not expert in these sections, don't worry. This is only for reference purpose, which provisions I have to read through. Section 16 says, look, you can take your input tax credit as long as the goods and services which are purchased by you are used in your business activity. Section 17 says, look, only to the extent of the inputs used in your business you can take. If you have an exempted turnover, you have to apply something called the apportionment or proportionate method. So section 17 says, if at all, you have a turnover which is dutiable, which is taxable, which is exempted. To the extent of your exempted turnover is there, please exclude that particular input tax credit. That is what the section 17 says. That is how we read this rule 42 and 43, where this particular rule explains us, proportionately, whatever credit you are taking, to the extent you are not eligible for common credits, I apply rule 42, I apply rule 43 for the purpose of identifying how much is the input tax credit I am not eligible for. So friends, keep in mind, when I am doing this calculation, eligible input tax credit and a section 16 and a 17 alone I have to take. I should not take this particular input which is disallowed under my section 17, which is in relation to exempted turnover. So this is one point which I would recommend keep in mind. I recommend keep in mind. Now, continuation to the question which was asked by Raman. I'll change my question slightly this way. Now, assuming that there is a supply of goods which are exempt under a notification, my rate of tax is nil. I repeat, my rate of tax is nil. I have a part of turnover where my rate of tax is nil. Why? By virtue of exempt. When I look into my tariff notification, the rate of tax itself is shown as nil. Now, the moment I say it is nil rated supply, it is an exempt supply. Now, for the purpose of your adjusted turnover, please keep in mind, adjusted turnover shall exclude exempt supplies. So here, friends, what will happen? My numerator in this particular problem, let me recap once again. I have a turnover called 10 lakhs. The moment I say there is a turnover of 10 lakhs, as Raman has pointed out, first question comes, when I am booking the purchases, when I am accounting for the purchases, answer to you, I know that there is a purchase of material, raw material, which is used for that particular exempted activity. I repeat, there is a exempted product called category A. When I buy a raw material, on raw material, my supplier is charging GST. I know that this category of raw material is used for product A, which is exempt. Now, question comes, will I take input tax credit? Answer is a big no. Why should not I take? My section 16 says, when you purchase, if it is used not in taxable activity, please don't take your input tax credit. Section 17 also says, only those input or input services which are used for your taxable activity, take your input tax credit. So here, the input what you are seeing here, that particular input does not consist of my material, raw material or capital goods, which are in related to this exempted category. So this is one point we need to keep in mind. Now, Coming to my adjusted turnover in this particular problem, my denominator shall be my total turnover is 1 crore minus this particular turnover called 10 lakhs, while my adjusted turnover shall exclude my exempt supply. So what happens here? Let me show you the formula. 20 lakhs is my numerator. So from where I got 20 lakhs? My category of supply, which is under your inverted UT, 20 lakhs, that divided by my adjusted turnover. Out of total turnover of 1 crore, I'm going to exclude my exempt supply. So that is how I have a numerator denominator revised. So when I apply that formula, I get my result of 2,66,000. The tax I have paid is 1 lakh. I am eligible for a refund of 1,66,667. Raman, hope I have answered your question. Good. Both Raman and Ambika, your questions are answered. Let me come back to my zero rated turnover. Refund of accumulated ITC under zero rated supply. So friends, I'm going to give you now second example, which is for a category called zero rated supply. Now I'll put the same headings: particulars, turnover, tax rate, tax. Now serial number. First one, domestic supply. Domestic supply with payment of tax. So my domestic supply is 45 lakh and my tax rate is say 12%. Now, what is my tax? 45 lakhs on that 12% is my tax, 5,40,000. Then second, supplies to SEZ unit. Say, I'll say 75% cases endorsement is available. Now, I made a supplies to SEZ unit. With payment of tax for 12 lakh. And the rate of tax is 18%. Third category, export of goods without payment of tax. So my export of goods is around 40 lakh or 42 lakh. I like 42 lakh 50,000. The rate of tax applicable is 18%, but I have not paid any tax. It is an export without payment of tax, right? So this is my transactions for a particular month. Now, please watch the given information carefully. In case of supplies to SEZ, I have paid my taxes. But it says 75% of the cases there is an endorsement available. So why is this information relevant? I draw attention to all of you to my previous session class whenever we talk about supplies to SEZ, endorsement by SEZ officer is compulsory on the supplies. Reason I gave you a logic for that. When he supplies goods and services, those goods and services should be for authorized operations. If it is not for authorized operations, officer will not process my refund application. So here I have only 75% which is under this endorsement. Rest all I don't have. Now, when I file my refund application, now say my ITC position, inputs, capital goods, input services. Say inputs is 2,50,000. Capital goods is say 12,500. And input service around another 1,50,000. Students, I am keeping IGST, CGST under one head just for your ease of understanding. So total during the month is this much. Now, please understand carefully. Please apply your logic. I wouldn't say common sense. Apply your logic. Nothing is rocket science here. End of the day, if you apply your presence of mind, if you have that presence of mind, things are very clear for us. Now, when I'm doing a domestic supply, 45 lakhs is my value on which this is the tax paid. Supplies to SEZ. Let me make my output tax, input tax little higher so that it's easy to correlate. And this one I'll make as 1,25,000 and this I'll make 2,50,000. Yeah. Now my output tax is 7,56,000 and input tax is 8,25,000. Now domestic supply with payment of tax. So whatever purchases I have done, that is being paid. Supplies to SEZ, whatever value is it, on that I have paid tax. Again, when I'm paying my tax, this should be out of my purchases. The tax which has come from my purchases. Now there is a turnover for 42 lakhs, which is export, where I haven't claimed any particular. I haven't paid any tax. It is export without payment of tax. Now the same formula what we do for your inverted duty structure: numerator divided by denominator into your ITC. I repeat, numerator by denominator into ITC. This is your eligible refund. Now, so what is my numerator? My numerator is your zero rated supply without payment of tax. What is denominator? My adjusted turnover excluding exempt supply. This is what they say. So here what I will do, my numerator, my denominator, my ITC. Now my numerator is exports without payment of tax. My denominator is total supply during the month. Now, so when I do this by this, I get a percentage and input tax credit. Now, here my result will be my numerator divided by denominator into input tax credit. How much I am getting? 3,52,000. Now, here, if you see a simple mathematics, my input tax credit I have used to the extent of 7,56,000. I repeat. My output tax, when I pay, I use it from ITC. Out of my purchases, out of 8,25,000, 7,56,000 has been utilized. 7,56,000 has been utilized. So how much is left out? 69,000. How much is left out? 69,000. Now, 69,000 is the input tax accumulated during that month. Now, when I go with this particular formula, numerator by denominator, I'm getting 3,52,000. Sir, it is very high compared to what I'm eligible for. They have put a ceiling. When you're filing a refund application, the formula what you apply or the input tax which is available in your credit ledger during that particular tax period. I repeat, my input tax available in the electronic credit ledger during that tax period, lower of these two shall be eligible for refund. So here my amount of refund shall be minimum of, I am applying a formula, minimum of balance in electronic credit ledger or formula, whichever is lower. So friends, this is what my Rule 89 talks about claiming of a refund in relation to your input accumulated on account of zero rated supply. Now here, one is formula which I have explained. Second, there is something called SEZ, 75% of endorsement available. Here, what will happen? I have to file a separate application for this particular category called SEZ. Now the officer concerned will process 75% of this amount as a refund, 1,62,000. Out of tax what you have paid, 75% he'll give you as a refund. So what will happen to the balance 25%? 54,000. Now this 54,000 is a loss to the registered person. Reason, when you give a letter of undertaking or bond, you have mentioned that you are going to comply with the provisions of GST law. So when you are making a zero rated supply and you say it is a zero rated supply, now I'm going to cover in my slides at a later point in time. In case you fail to satisfy any of the provisions, you are not entitled to get refund of that particular amount. Now, this 2,16,000 I have already paid to the government. My officer has processed refund of 1,62,000. What will happen to this 54,000? Now, question here: will I get the rejected amount recredited to electronic credit ledger? And question here is, out of 2,16,000 what you have paid, the government has given you a refund of 1,62,000. So the balance amount of 54,000, what will happen? This amount, the moment they have rejected, it does not come back to my electronic credit ledger. Why so? Only in case of accumulated input tax credit. Recredit happens. Now, I draw your attention to one of my previous session where I have explained you something called a T account, electronic credit ledger, electronic liability ledger. The moment I file a refund application for my accumulated credit, the government says, look, I'm going to take the balance in your electronic credit ledger. That balance which is sitting in your balance sheet as current asset receivable, when I process your application, the same amount I'll give a credit back into bank account. Now, if government has failed to recredit into my bank account, that portion which is rejected, it will come back and sit in my electronic credit ledger. So in this case, out of 2,16,000, when 1,62,000 has been processed, the balance 54,000 shall not be recredited for the simple reason this is a claim for refund with payment of tax. This is not my accumulated credit. So for that reason, you are not entitled for refund of that 54,000. What I have to do? File NAPI if you have some reason to believe that this tax is entitled for you to get back. So friends, this is all what I wanted to discuss with you in relation to my computation of refund in relation to inverted duty structure and your zero rated supply. Now let us get back to our presentation for today. Yes. So refund, these two problems are covered. Examination, please expect one question from inverted duty structure and one adjustment in relation to your exports with payment of tax where there is a partial rejection. I repeat, when there is a rejection of your refund application, whether that rejection, do you get a recredit back into your account? That is one problem which you can expect. So out of 8 marks, one question for 4 marks is already taken care. One by way of a problem, one by way of a theoretical discussion. So examination 4 marks is taken care. Let me come to the other topic of today's discussion. Friends, these are a couple of definitions I have borrowed from my Customs Act 1962. Now, I wouldn't say you to by heart. I would say you to only understand this particular definition. Let us understand the concept, then it is easier for us to interlink with our discussion on import and export. First definition, customs area. Customs area is an area which is under the customs authority, right? Now, customs area, the moment I say it is like a bonded area. When we say military area, when you see in couple of places, there is a place earmarked for army, for military. Now they say this area is under the control of army. Trespassers will be prosecuted. There is no entry of any outsider. What is happening? They have put a fencing. That fencing is indicating that this is under a supervision. Free flow of material in or out cannot happen unless there is a authority. Customs area means it is an area which is under customs station or which is a warehouse. Now they use a language called customs station or a warehouse or a warehouse. Now, custom station, now like railway station, it is a place where you get the material cleared from your ship or vessel or your aircraft. So there is a place where material is meant for clearance, or it is a warehouse. Importance. Majority of the chartered accountants, majority of the professionals, they don't practice in customs. Reason one, lack of exposure in articleship area. Second, they feel that this is more complicated. But friends, take it from me. This is one area. I'm talking about warehouse. Warehouse. This is one area where economies of operation, economies of scale of operation, cost saving, cost cutting can be thought if you are wise in your business advisory, if you are wise in guiding your client in this matter. Now, when I talk about a warehouse, warehouse is nothing but a particular location. Warehouse is nothing but a particular location where a government authorities have given permission to store the material. They have given a permission to keep something with a pre-approval route. Now, when we come into customs, I would draw your attention how and why we need to look into this warehouse as a business tactic. Now, this is area where I import the material, I keep in a warehouse, I try to wait for a good price of exchange price. Again, I export that material back. I can do a trading activity. I can do a manufacturing activity. In warehouse, instead of me getting back material into my factory, I will keep the material in warehouse. I do a assembly, I do a manufacture, I export the material back of India. Why? The moment I file a bill of entry, I need to pay customs duty. Assuming that I require 10 or 15 days for assembly. Now, me getting that imported material into my factory, doing the assembly function, again exporting back. After export, I have to claim something called duty drawback. There is a time limit for processing. There is an admin cost. There is a working capital blockage. Now here, the moment I put my material in warehouse, I need not pay customs duty. I'll execute a simple bond. Why? In case if something goes wrong, the authority concerned can invoke that particular bond. I'll give you 3 times of the duty, which is by way of a bond. Now, in warehouse, I can get my material stored, I do assembly activity, and I export from there itself. What is happening? I don't pay my freight, I don't pay transportation, I don't pay my customs duty, I don't file a refund application for duty drawback. Now, all this is avoided when I do this particular activity. So, friends who are listening to me, please keep in mind, watch for the topic on custom provisions. One of the fine-tuned topics which I would request all of you to attend for compulsory. Don't look from examination point of view, look from career point of view. One of the promising career in your advisory role. Next, they say this is an area where I call that as a custom station or a warehouse. And this also includes an area in which imported goods or export goods are ordinarily kept. Now here, imported goods or export goods are ordinarily kept before clearance by customs authority. What they say, when I bring a consignment for the purpose of export, there is a way, there is a place where they'll ask me to park for getting some clearances. There is something called test report, assessment report, docking. They'll do the testing of your material, stuffing. There is a container with the right from factory, there is a seal which comes where your clearance process is easier at customs port. All the regular formalities are bypassed when there is a self-sealing mechanism right from your factory. Now, these are all couple of activities. If at all, if the goods are stored in an area, which are stored in the area, which is controlled by customs authority, I call that area as a customs area. Now, friends, this is a definition for your knowledge purpose, not from your exam point of view. Customs port means a port which is defined by the customs authorities, which is a place which is defined or identified by the customs authorities, where ICD, which includes also ICD, where you are permitted to get a vessel or you are permitted to get a craft for bringing the material in or for taking the material out. Customs station. It includes a port, airport, international courier terminal, foreign post office, or land customs station. Now, I'm trying to just open up your thought process from customs point of view. These definitions, just to give you an idea, when I bring material into India, look, there is something called customs. When I take material out of India, again, I'm saying that, look, there is something called customs. There is a front, there is a border. When we talk about definition of India, this particular customs definitions are something which is relevant for us. I'm not going in depth from customs point of view. I'm just bringing an awareness to you that, look, there is a customs port, look, there is a customs station, where a permission or authority gives me a clearance for getting the material into India or taking the material out of India. Next. This definition, again, this is picked up from my customs law called export. Under customs law, export means, with its grammatical variation, cognate expressions, taking out of India to a place outside India. I repeat, taking out of India to a place outside India. In customs, there is one fantastic definition called derelict, jetsam. When there is a boat or a vessel, which is carrying the goods, it sinks. It sinks. The sinking of a boat can happen within territorial waters, can happen outside territorial waters. Now, why is that we are talking about these things? We need to understand, when someone says export, this export is out of India. My export means, it's a grammatical variation. Government is taking the material outside India. Keep it. Friends, just give me a minute. Yeah. Friends, sorry for the interruption. Now, this particular export, with its grammatical variations, it says wherever the material has to be exported, they say the material should be gone out of India, should be taken out of India. Now, it is not sufficient. If the material has crossed the customs frontier, but within India, within territorial waters, the metal have sunk. Can we say it is out of India, export out of India? This is what we need to understand. I'm not touching case laws. I'm not touching the provisions. From customs law, when we deal, please keep a watch how we will interpret this particular definition. Next, coming back. Customs frontier of India. It means a limit of a customs area as defined under Customs Act. Customs frontier is a border which is defined as per my customs area. Now, here I start my definitions under GST law. Friends, from here, I'm starting my definitions under GST law, import of goods. When do I know the goods have imported into India? When do I know the goods have been exported out of India? This is how I go to the definitions under customs law. So first thing, import of goods, with its grammatical variation in cognate expression, means bringing goods into India from a place outside India. So what do you mean by goods bringing into India? CA examination, final examination, example, there is a question, Define India for 5 marks. Define India for a weightage of 5 marks. Can you imagine? A question was asked, explain India 5 marks. Never ever thought definitions of that sort would be tested. Friends, keep in mind, anything can be expected from our examination. There are a couple of definitions which are very, very important. So one of them is India. And couple of definitions, whatever I have put over here. These are the definitions I would say need not you have to present as it is. Understand the concept, understand the logic, try to present that particular logic as it is. Try to present that particular logic as it is from your examination point of view. So here they say the goods which are imported into India from a place outside India. When I say imported into India, there is a definition called 12 nautical miles. From the sand, from the land mass up to 12 nautical miles, I call that as territorial waters. Beyond that, 200 miles, 200 nautical miles, that is a place which is also coming into the, I wouldn't say Indian territorial waters, it is beyond your Indian territorial waters. Any ship, any vessel which is coming into Indian territorial waters, we wouldn't say import has taken place. Import has taken place when the goods have crossed territorial waters meant for clearance into the domestic area. I repeat, when the goods have crossed my territorial waters and an application has been filed for the goods getting into the Indian soil. So friends, the moment the goods have landed in territorial waters, I wouldn't say that import has taken place. I would say when the goods have crossed customs frontier place for the purpose of clearance, I would say this have it has crossed my border where import is taking place. There's a wonderful definition in the customs. Again, I'm not touching those examples now. Reason, it is relevant from my customs law point of view. Why, sir? Customs law teaches you, explains you, when would you say import has took place? When would you say the import has triggered? When would you say my filing of bill of entry has to be done? When would you say the goods have to be stored in a warehouse rather than clearing for your domestic tariff area? Now, these are all couple of events which are revolving with assessment of duty, determining rate of duty. So I wouldn't go in depth. I'm trying to bring your attention that these aspects interlink from my customs law for the purpose of GST law. Coming back, export of goods. Again, from GST law, with its grammatical variations and cognate expression, export of goods means taking goods out of India, where to a place outside India. I can very well say export means taking goods out of India to a place outside India. Taking goods out of India to a place out of India, outside India. Very well. For the 2 marks question, you can see this. Maybe 1 or 1.5 mark would be given for that grammatical variation, cognate expression means the intent of the law, the intent of the expression says that the goods should be meant to be out of India to a place outside India. The moment goods doesn't go out of India, then there is no cognate expression. Cognate means inherent interpretation that the goods are actually intended to go out of India. Next, export of services. Now, this is one definition from service tax law was important. From your GST law, also an important question. Now, there's one question from Venkat. Let me take up that before we go further. Capital goods ITC be refunded for an organization that only does export of service. Venkat, yes, there is a eligibility of credit on capital goods. There is a small alteration to the definition. Recent finance budget, there was an amendment to my section 54 where restriction of input tax credit on capital goods, I repeat, restriction of input tax credit in relation to capital goods has taken place. Not relevant for May 2021. As of now, please understand that my refund of input tax credit includes inputs, input service, capital goods. Reason, there is no specific exclusion unlike your inverted duty structure. So as of now, please understand that yes, I can claim a refund. Coming to my definition called export of services. Export of services. This is one definition which is very important from my service tax law point of view. Why so? Lot of debate happened, lot of misunderstanding happened with respect to this particular definition. This says whenever you say it is an export, my supplier of service is located in India. Now, only when service is triggered from India, I can say it's an export. The recipient of service is located outside India. My supplier is in India, the recipient is outside India. Please understand. In a supply, section 7, a supplier is required, a recipient is required. Supplier should be in India, recipient is outside India. The place of supply for that service is outside India. I repeat, the place of supply for that particular service is outside India. Section 10, 11, 12, 13. I repeat, section 10, 11, 12, 13. These are the 4 sections of IGST Act. Please make a note in your working note. Section 10 and 11 talks about goods. Section 12 and 13 talks about your services. These 4 sections of IGST Act gives you a guidance with respect to your place of supply. I wouldn't touch that. Already this was discussed in detail. For you, from your examination point of view, what we need to understand, if the place of supply of that particular service is outside India, and the payment for such service has been received by the supplier of service in convertible foreign exchange or Indian rupees wherever permitted by RBI. Now they are saying that my payment for that particular service has been received by the supplier in convertible foreign exchange. Now, if you recollect, the other day I gave you 2 things called BRC, FIRC. In the previous class, when we were discussing BRC, FIRC, Bank Remittance Chellan, Foreign Inward Remittance Chellan, the government authorities want to know what is the service you have exported. When the money has come in convertible foreign currency, please go to your bank, produce your invoice, get a certificate from bank that this invoice money has come in foreign currency. Also they say, or Indian rupees. Sir, what is it? Why Indian rupees? Where permitted by RBI. There are special peculiar transactions when there is a Asia Pacific committee. In Asia Pacific, couple of places, the money can be deposited through Vostro Nostro account in a convertible foreign currency. From the originating nation, they use a foreign currency. In the receiving nation, it can come into INR. Like example, I'm an exporter. I have the money deposited by my customer. That foreign nation, it has been put into a bank account in foreign currency. By virtue of your conversion channel, that money came into INR into my account. Vostro Nostro account we say. Like when I export, I say the value of export is 13,50,000 rupees INR. I don't want my supplier to give me a penny extra, a penny less. I would request, please put equivalent 13,50,000 into my account, Vostro account. The customer instruct the banker in foreign nation, please debit my account in a foreign currency equivalent to a rupee of 13,50,000 to be credited to that particular supplier. That could be one exception what they are talking. Nepal, Bhutan, we have discussed in our last class. Any money we receive from Nepal or Bhutan in relation to export of service or goods shall be considered as my zero rated supply. A very important last leg of my definition called supplier of service and recipient of service are not merely establishments of a distinct person. That means to say head office and branch. If there's a branch in India, and if there is head office in India, the branch is in Singapore. Any transaction between the branch and head office shall not be considered as your export. Reason, both the entities are under one brand, under one PAN. So that is something which they say it cannot be considered as your export of service. Import of service. When do I say import of service has taken place? Import of service means a supplier of any service where supplier of service is located outside India. Recipient of service is located in India. Place of supply of service is in India. Now, a simple definition for import, My service provider is also in India. Service recipient is in India, and the place of supply is in India. For this, I need to look into my section 12 of IGST Act. I'll give you a couple of examples. Uh, Friends, you might have experienced your articleship days during COVID. Most of the offices have been locked down. You are working in an area which is under lockdown. What do you call? It is containment zone. Now you're not supposed to come out of that zone, though you're in good health. Because of your surroundings, you're asked to stay in that area. Now everyone started working on cloud. Now what we did, we our office data used to be in a local system called server. Now everyone said, okay, let us get into Google Cloud. What business people did, they took the services of Google for having a space for storing the data, for sharing that particular data with the office dedicated staff. Now there is a dedicated Google services where I, as a chartered accountant sitting in India, I paid a sum of rupees, say 50,000 for buying that particular space. So Google says, for giving you that service, where I'll give you a space of say 1 terabyte, I'll give you access of 30 people, I'll give you services of backup and restoring it, something. When I pay 50,000, look at this example. Supplier of services located outside India. When I pay 50,000, Google US, Google Pennsylvania, the office which is there in US is raising a bill on me, Praveen Chartered Accountant, sitting in Bangalore for 50,000. Located in India, service provider is outside India, services recipient is located in India, place of supply is in India. In relation to these services, my section 13 says the place of supply happens to be India. This is called import of service. Next, non-taxable online recipient. Now the same example means any government, local authority, government authority, individual or any other person not registered in receiving online information database access or retrieval services in relation to any purpose other than commerce industry. Now, this is a big definition which is little important. I'll use my highlighter: a government, local authority, governmental authority, individual or any other person not registered and receiving, these people are receiving online information and database access or retrieval services. I'll give you an example. Netflix, your what do you call Hotstar. I'm not sure whether this Netflix and Hotstar are Indian origin. I'm just giving an example. This COVID has changed the entire lifestyle. Sitting at your house, you don't go to theater, you watch a movie on Netflix. The service fellow is giving you service by means of internet. For watching Netflix, what best I need? Internet connectivity. The moment I have an internet connectivity, I pay say 100 rupees or 200. I access to their database. I download a movie. I watch a song, a particular movie, or I download some material in relation to any purpose other than commerce, industry, or any other business. Now, they say you are not using that particular thing for your business, commerce, or profession in a taxable territory. Then this is called non-taxable online recipient. So all these people, government, local authority, government authority, an individual or any other person. These people, when they receive services, how online information database access retrieval service. Friends, I'm not going to cover this section 14. This is in line, in simple, what we are understanding. My GST law says, section 14, if at all, you are receiving any online information database access or retrieval service. Online, you know what is an online? Offline, online. Information in database. Now, what do you mean by database? RDBMS. There's a server. I access to the server and download. I either push or pull a data. Access or retrieval. Access, I just browse and go there. Retrieval, I take a data out of that. So if you are being enjoying this online information data or retrieval access, now how is it happening online? Sir, how do you get this data online? By virtue of internet. Internet is compulsory. The data access is happening online, and this is in relation to access or retrieval. I just download or I need to retrieve some data. I access and retrieve a data. This is called, they're saying called non-taxable online recipient. All these people are called non-taxable online recipient. So why is this definition relevant? I'll tell you, Constitution has given a right. Constitution has given a power. Now, it is not that easy for the government to tax each and every person when there is a business or commerce. Now, Netflix is one classic example. When everything stopped, Netflix made big money because everyone sat at home. They were watching for content online. Now, when the business is happening from India or within India, they felt that let us tax this particular activity. Now, this is not something new. Even service tax, we had this particular thing. The same thing we need to understand from GST. Section 14 of my IGST law says that any service provider or any person who supplies this online information database access or retrieval services to these five set of people, then that particular supplier, that particular service provider, he himself, either through agent or by themselves, need to get registered in India. If they are not registered in India, then this is that there is a violation of non-payment of tax. Now, for these five category, individual person, government or local authority, since they felt, let me not burden these people for payment of taxes and compliance with the law, let me put the responsibility of levy on the service provider itself. That is how this particular non-taxable online recipient has come into picture. So friends, examination, if they ask you what is a non-taxable online recipient, simple, a government, local authority, governmental authority, individual or any other person who are not registered and they are receiving the online information or online information and database access or retrieval. Now, this is one simple logic. If you are doing that, the service provider has to charge, has to collect and pay the tax in India. This is the importance of my definition called online information database access or retrieval service, where in relation to a non-taxable online recipient is concerned. Now, next. This is what I was talking about, online information database retrieval access service. Means services whose delivery is mediated by information technology over the internet. Information technology over the internet. Without internet, nothing is going to happen. Or electronic network by way of a dedicated line, which happens through internet. Nature of which renders their supply essentially automated, involving minimal human intervention and impossible to ensure in the absence of information technology, includes electronic services such as advertising on the internet. I'll give an example. Most of these people have come back to India after COVID. People have gone on a temporary visit or whatever it is. They have their household belongings over there. They have taken a picture of those items and they have put on like your OLX in India. I have my belongings outside India. I have put them on auction. When someone is giving a services to me in India. Now, what is happening? Government of India is tracking where any money which is going out of India in relation to this online information data access or retrieval service, that particular service is deemed to be a supply within India for the purpose of levy of tax. So one of the example, advertising on internet. I'm going to showcase myself. Now I'm working in India. I've lost my job. I'm giving outsourcing activity. So I place my resume and other things on a internet advertisement like Naukri.com, Shadi.com. There are websites where I can put some requirement on the website. So if it is on relation to advertisement, providing cloud services, I have explained the Google Cloud for remote access of my data. Providing ebooks, movie, music, software, or intangible through telecommunication network. Now, Netflix is something where we have discussed on this. Providing data or information retrievable or otherwise to any person in electronic form through a computer network. Now, this is where people started coding. People started putting the content on the website. We have this something called Bitcoin. People are tech savvy. People have little knowledge on this. There is a concept called Bitcoin. In India, Reserve Bank of India has banned this currency. Reason Bitcoin is recognized as a currency. There's a competitive market for INR where Bitcoins will overtake my INR. The value of rupee gets weakened and this Bitcoin gets strengthened. What is this Bitcoin? Like your Indian rupee, I go to a vegetable store. When I buy vegetables, I pay sum of rupees 100 to be the store keeper. Now, similarly, in information technology side, these people, the techies who do a programming, who do a particular stuff, they get the payment remuneration by virtue of a bitcoins. So here they say any data which is provided through internet for the purpose of your work related, they say that can be considered as your online information database access or retrieval service. Online supply of digital content like your movie, television shows, etc. Digital data storage, online gaming. Now, all these are the category which they have brought under your definition called online information database access or retrieval service. Now, friends, till now, these are all couple of important definitions which is important for us to understand my import of goods, my export of goods from GST law. Before we start with that, this Article 269A is something which I want to draw your attention how and whether a power authority is given to the government per se. When you read this law in a right direction, you get many things. Constitution of India is one particular resource which gives you wisdom. So much of knowledge is there. When you read these law papers, taxation papers, you get familiarity with these provisions. One of that particular provision, Article 269A. But for this article, whatever we have discussed till now, online information data access retrieval service wouldn't have been made easy, wouldn't have been made simpler. Government is making a person registered operating outside India, getting a business from India, held liable to get registered and pay tax in India. This is the power of your Article 216A. Let us read and understand what is it saying. The goods and services tax on supply in the course of interstate trade or commerce shall be levied and collected by whom? By Government of India, and such tax shall be apportioned between Union and states in the manner as may be provided by Parliament by a law on the recommendations of the GST Council. Now look at that. Any tax cannot be simply levied. I draw your attention to Article 269, Article 265, Article 256. These are a couple of articles which brings the knowledge of levy, which brings the authority to collect a tax. Now, this particular article says that GST on supplies in the course of interstate or trade or commerce. We know supply of goods, supply of services. In the course of interstate trade or commerce, they say they have given up authority to levy a tax called GST on what? Interstate trade or commerce. Now, we will look into those definitions, Section 7 and Section 5, powerful definitions under IGST law. I again draw your attention, Section 5, Section 7, powerful definitions under IGST law, where this power which is given under Constitution of India was utilized properly. So they say they are given to the Government of India to formulate a regulation. For the purpose of this clause, supply of goods or services are both in the course of import into territory of India shall be deemed to be a supply of goods or services are both in the course of interstate trade or commerce. Now they say when we talk about supply in the course of intertrade or commerce, that shall be deeming fiction that that particular supply shall be deemed to be a interstate trade or commerce. They say no argument. The moment there is a supply into India, export out of India. The purpose of this clause, supply of goods and services are both in the course of import into the territory of India, in the course of import into the territory of India, shall be deemed to a supply of goods or services interstate. So they say it is not intrastate, it is an interstate supply. It is not IGST, it is a SGST, it is not SGST, CGST, it is IGST supply. That is what they have clarified in this particular definition. Next. Parliament may, by law, formulate the principles for determining the place of supply when a supply of goods or services both take place in the course of interstate or commerce. They say we are going to define by way of your rules and regulations how it is going to be intrastate or interstate. Section 5 of my IGST Act, as I say, the moment I say there is a constitutional authority, my section 5 comes into picture, which defines for levy of IGST on imports. It says, there shall be levied a tax called IGST on what? On all interstate supply of goods or services of both, and shall be paid by the taxable person. Shall be paid by the taxable person. Now, integrated tax on goods imported into India shall be levied and collected in accordance with the provisions of Section 3 of Customs Tariff Act. Customs Act 1962, Customs Tariff Act 1975. Now, again, I am bringing the awareness of customs provisions. I'm not going to discuss in detail. Reason we have a separate session on that. Here, you need to understand that the moment there is an interstate supply, there is a levy called IGST. No doubt on that. My interstate supply, goods or services, IGST. If there is a import of goods, my IGST shall be levied. How? As per Section 3 of my Customs Tariff Act. So when the goods are imported into India, at customs place, at customs station, when there is an assessment done under customs law, Section 12 of Customs Act 1962, read with your Section 3 of Customs Tariff Act, what they say, when the customs authorities do the assessment of customs duty, along with customs duty, a tax is paid called integrated tax. So friends, in relation to imports, I being a registered person, I would pay my integrated tax at the time of payment of customs duty, where under Customs Act. Now, on what value? The value which is identified under my Customs Act. And at the point when the duties of customs are levied on the said goods under Section 12. So here what they're saying, there is no doubt whenever there is an interstate supply, you need to pay IGST. In relation to import of goods, this import is happening through customs frontier, through customs station. That point in time, along with your customs duty, the value which is identified for customs duty, on that value which is defined under Section 12 of Customs Act 1962, they say, I need to pay a tax called integrated tax. Now, question comes here. So, should I pay only IGST? Should I pay compensation cess? Should I pay only IGST or should I pay even compensation cess? I draw your attention. My rate of tax under IGST, my compensation cess defined under IGST, wherever it is applicable, the same tax is paid at customs law. Example, motor vehicle. When I buy a Toyota car, value exceeding 10 lakh rupees, I repeat, when I buy a Toyota car having a value exceeding sum of rupees 10 lakhs, I pay a cess under India GST law. Similarly, when I import a motor vehicle whose value is exceeding a sum of rupees 10 lakhs, the compensation cess, GST compensation cess, along with IGST compensation cess is also levied in my Customs Act. Next, Section 7. We have read Section 5. Section 5, a levy. So they have said you have an authority to levy a tax in relation to your imports. Section 7, it says your interstate supply. In relation to section 7, it says wherever there is an interstate supply, the supply of goods which is imported into territory of India till they cross the customs frontier of India shall be treated to be a supply of goods in the course of interstate trade or commerce. Now, this is one definition. This is one definition, very important with reference to high sea sale, with reference to a sale which is happening in a foreign nation without touching my Indian soil. Principally, predominantly, this particular definition, predominantly, this is a definition which is more relevant for my high sea sale. Again, students who doesn't know customs, who doesn't know high sea sale, I'll give you an example. I'll explain in detail. As of now, please keep in mind, Section 7 says that supply of goods which are imported into territory of India till they cross the customs frontier of India. That means to say, when the goods are being imported, they've crossed the customs frontier. Till I file my bill of entry. When the goods get into the territory of India, but they have not crossed the customs frontier. What is customs frontier? It is a range. The moment it crosses, it is deemed to be mass of India. The goods take the mass, or it becomes part of my Indian soil. So till it doesn't become part of my Indian soil, the supply which is taking place shall be called as interstate supply. Section 7, which talks about your supply of goods till it doesn't cross my customs frontier. High sea sales is important from this particular definition. Supply of services imported into territory of India. Supply of services imported into territory of India shall be treated to be a supply of services in the course of interstate trade or commerce. Now, what they say? Goods, I say it is an interstate supply. Services, I also say interstate supply. I'll give you an example. So there is a ship which is coming into India. It entered 1200 nautical miles. I'll put you very simple. Say this is my Indian soil. From Indian soil, 12 nautical miles. Say this is my Indian soil. From Indian soil till 12 nautical miles. I call that as India. It is a definition of your India. 200 nautical miles. 200 nautical miles. Now this is a place where it is coming into territorial waters, which has not actually come into India per se. Now this is one particular definition where it says any service given in this 12 nautical miles. I repeat, any service given in this 12 nautical miles. Example. So there is a ship which is coming into India, which actually didn't enter the 12 nautical miles. It is in territorial waters. There is a damage or there is an engine problem. A engineer from India goes to that territorial waters. He gives a service to that particular ship. He does a repair activity. Now, can we say it is an intrastate supply or interstate supply? So there is a Shivaji terminal, Chhatrapati Shivaji cargo station. When the ship is supposed to reach that Maharashtra border, in the territorial waters, there is a damage. Now, when the engineer goes from the state of Maharashtra and does an activity, can we call that as a intrastate supply? SGST, CGST of Maharashtra should be charged, or IGST of Maharashtra should it be charged? Now, this is what we need to question. So, why are you making so much of attention? Why is that so much of importance being given? Friends, I draw your attention to section 49, read with the rule 88, where we had this mechanism of set off of my credit. IGST, I can set off IGST, CGST, SGST. If it is SGST, CGST, I can use only IGST or specific SGST, specific CGST. Payment of taxes do matters, my dear friend. For that reason, we need to understand how do we apply this section 7. How do we interpret whether it's an intrastate supply or interstate supply? Now, this section gives a clarity that any services or any goods till they cross my customs frontier, or if the services are imported, it shall be deemed to be a supply in the course of interstate trade or commerce. Supply of goods and services are both when the supplier is located in India, the place of supply is outside India. Now, it is an interstate supply They say when the supplier is in India and the place of supply is outside India, again, to or by a SEZ developer or SEZ unit. I draw your attention here, very important point, to or by a SEZ developer, SEZ unit. Supply of goods to SEZ unit. Supply of services to SEZ unit. Supply of goods by a SEZ developer. Supply of services by a SEZ unit. Please read. They say to or by. Now, what is that they're saying? Shall be treated to be a supply of goods or services or both in the course of interstate trade or commerce. Now, they're saying that in relation to section 5. Now, when supplier is in India, when the place of supply is outside India, or to or by SEZ developer or unit, it shall be treated to be a supply of goods or services in the course of interstate trade or commerce. Now, they are saying that any supply where supplier is in India, recipient is outside, place of supply is outside India. I repeat, supplier is in India, my place of supply is outside India. I call that as an interstate trade or commerce. Interstate trade or commerce. For 5A, I'll give you an example. There is a factory in, say, Haryana. There is a factory in Haryana. This particular factory does a manufacturing activity. Say, they manufacture tire and tube like MRF C8. The factory in Haryana manufactures tires. These tires, which are manufactured, should be exported to a nation called Iraq. I repeat, the tires which are manufactured in Haryana, these tires should be exported to a place called Iraq. This person who is manufacturing gets hold of a service provider who does this activity of transportation. In Haryana, XYZ Limited is a service provider in transportation of goods where they have their own vessel. So this manufacturer called ABC Limited gets hold of this XYZ Limited. ABC Limited, manufacturer, XYZ Limited, a service provider who has got his own vessel. ABC Limited says, look, I have 10 containers which needs to be supplied to Iraq. Now, do you handhold this? They say, yes, don't worry, we will take care of this. Now, for delivering this 10 containers in the nation of Iraq, XYZ Limited says, I'll charge you a sum of rupees 5 lakh. I'll charge you a sum of rupees 5 lakh. Please understand this transaction. Supplier is in India. Recipient is in India. The manufacturer is a recipient. The service provider is a supplier. XYZ Limited is in India. ABC Limited is in India. Both are in the state of Haryana. When XYZ Limited raise an invoice on this particular ABC Limited, they call that as an interstate supply. Why, sir, it is interstate supply? The place of supply is outside India. The goods are taking out of India. My section 12 read with section 13. Section 12 read with section 13. In relation to transportation of goods, the place where the goods are taken out of India shall be considered as place of supply. Now, in this case, friends, when the goods are supplied to Iraq, when the goods are taken to Iraq, the place of supply is outside India. Supplier is in India, the place of supply is outside India. It is an interstate supply. It's not intrastate supply. So friends, my section 7, subsection 5 clearly says, in case, if the supplier is in India, and the place of supply happens to be outside India, we shall call that as a interstate supply. This is one important thing with respect to my interstate supply. Second important aspect, B, to or by a SEZ. They say, in case if the services are given or taken from a SEZ, we call that as a interstate supply, right? Next. Place of supply of goods. But this, I just draw your attention, only important point. I'll not discuss in detail. in relation to section 11, when the goods are imported into India, in relation to that goods, the goods where the importer is there, that shall be your place of supply. I draw your attention. In relation to import, my place of supply shall be location of importer. So if there is a import of goods from Iran by a importer in the state of Punjab, then Punjab shall be your place of supply. Why? When I pay customs duty in my bill of entry, I need to mention supplier name, his GST number. IGST what is paid, 50% to be paid to the state of that particular state as a compensation. So if there is a importer in the state of Andhra Pradesh, when the goods are coming from say Germany to Andhra Pradesh, they'll say at the customs port in Andhra Pradesh, the GSTN of this fellow will be given where IGST 50% will come back to the state of Andhra Pradesh. Now, in relation to export from India, shall be location outside India. So when you talk about your exports, my place of supply is the state which is outside India, the nation which is outside India. So just keep in mind imports, importer, exports, the location outside India, right? Now it is in relation to supply of goods. Physical movement, where the goods are going, follow the goods. That is what they say. Next. Levy of IGST from a Customs Tariff Act point of view. From Customs Tariff Act point of view, what they say, this again, I'll give you just for your understanding purpose. My Customs Tariff Act says that, look, I levy something called customs duty. Now that customs duty, my value of material plus customs duty, these put together, I charge IGST. Now example, so when I imported the goods from say US, the value of goods is 1 lakh USD or say 1000 USD. If I convert into INR, assuming that the value of goods came to 80,000, on 80,000, I pay my customs duty, I pay my social welfare surcharge 10%. Now, say 80,000 is my value of goods, say 18,000 is my value of customs duty. 80,000 plus 18, 98,000. On 98,000, I pay something called IGST. So this is the importance of my Customs Tariff Act. Now, this is a provision under my customs law called warehouse. Under Customs Act, there's a principle called warehouse. I have given an example of warehouse. So I don't file bill of entry for getting the material into my register premises. I rather keep in a warehouse. I'll give an example. Merchant trader or wholesale trader. Now these are the people who deal with this particular thing. Steel, scrap of steel, your crude. Now there are a couple of products which are very price sensitive. If there is a up in my currency, there is a high value which I'm going to fetch. Reason, I have to pay in dollars, I have to receive in dollars. Now, what is this concept? Goods which are kept in a customs bonded warehouse, those goods before actually cleared for your home consumption, I can make a supply of those goods. Now let me see if I've given an example. No, I'm not given an example. Let me come to my Excel file so that you can understand this in a better fashion. Hope you are able to see my Excel file. I'm talking about a warehouse concept. Now, say 12th July 2020, goods reached customs station. So, Mrs. XYZ and Co. filed a bill of entry for bonding, for taking to a bonded warehouse. That means to say, on 12th July, this entity called XYZ Limited, they don't want to clear the material. Say XYZ Limited, they are registered in the state of Uttar Pradesh. 20th July 2020, Now, assuming the value of goods is say, I will say $15,000. Now, 20th July, there was a news that the material which was imported are going to be little higher price because of your global prices concern. So the value happens to be 18,000. Now, on 31st July 2020, there is a news that the value correction is going to happen to say $12,000. There's a news, it didn't happen. Now, what will happen on 31st July? Mrs. XYZ Limited, XYZ and Co. supplies the warehouse goods to Mrs. PQR Limited. What is the price? Say at the rate of $16,000. Now, look at this trade concept. 12th July, this entity has imported the goods whose value is 15,000. Now, this is one commodity based on your global markets, it jumps or falls down. 20th July, the value of goods is 18,000. 31st July, there was a news that the material price is going to have a correction where it is going to be at $12,000. Now, this entity has got into a deal on 31st July where this entity called XYZ Limited has supplied the goods to this entity called PQR Limited for $16,000. Now, friends, please keep in mind, all this transaction happen when goods are in warehouse. This is what I want to draw your attention. I have not filed bill of entry for domestic clearance, for home consumption. I filed bill of entry saying that, look, I'm going to take into warehouse. So what you will do at warehouse? I can do a simple storage. I can do an assembly activity. I can do a manufacturing activity. I can do a re-export from there. If nothing is required, again, I can file a bill of entry for home consumption. I can do anything. Now, this is all transaction happened within a bonded warehouse. Now, the question comes here, is it a supply under GST? Does this XYZ, Mrs. XYZ and Co. has to pay GST? If so, what is the rate of tax? What is the supply, intrastate supply, interstate supply? These are all various questions get revolved in relation to this supply. Friends, this is like your stock market. People who know stock market, the basics of stock market, how to enter, how to exit, what to buy, what to sell, there ends the money that creates a new opportunities, new avenues to play around. That is how this concept of customs read with your import export, very, very relevant. Now here, this concept says under customs law, there is a provision under Rule 46, Section 46, where the goods, instead of getting cleared, that can be taken to my bonded warehouse. Now here, once the goods are in a bonded warehouse, this happens by execution of a document called into bond. There's a concept called into bond. So what is an into bond? I'm taking the goods into a bonded warehouse. Why? I'm not intended to clear that for home consumption. So I file a document called a bill of entry called into bond. There is a language used called bond. I agree to pay 5 times the duty which was to be paid but not paid by virtue of a bond. Why? I'm trying to give a protects to the interest of revenue. I'm going to give a protection to the interest of revenue. 5 times is the value of bond. So it is costly, but it has got a lot of business opportunities in it. Now here, as an importer, in this example, XYZ and Co., when the goods have reached customs frontier, I have an intention to see the global price and then decide. So what I will do, I'll file into bond to get that goods into my bonded premises. That importer is permitted to transfer title to such goods, such warehouse goods. This importer has a right to transfer. Now, what is happening? Customs authorities know XYZ and Co is the importer. That importer, when the goods are in customs bonded warehouse, law permits me to transfer the title. So how does it happen? The buyer who is going to do that is going to file X bond, bill of entry. The buyer has to file X bond. I'm taking the goods out of the bond, X bond, bill of entry, for clearing the goods, for home consumption. Now, friends, when I do these transactions, there is a reference to Schedule 8, Schedule 3 of my CGST Act. Schedule 3 says neither supply of goods nor supply of services. I repeat, it is neither supply of goods nor supply of services. That means to say, this entity, let me go back to my Excel file. Yes, hope you are able to see my Excel file. My law says in relation to goods cleared in customs warehouse shall not be supply of goods or services. This is the crux. Now, XYZ and Co should not pay any GST. I repeat, XYZ Co should not pay any GST. Why so? The transaction has taken place in a customs premises which is not subjected to GST on the Indian soil. Reason, when the goods have not crossed the customs frontier, the goods are within the customs premises, they say the transaction has not for triggering my levy under GST law. Schedule 3, Table 8, Clause A, Para 8, Clause A. Schedule 3, Para 8, Clause A. It says, when the goods are supplied in the customs premise bonded warehouse, before the goods are taken out of the customs bonded warehouse, it shall not be considered as supply of goods or supply of services. That means to say, no GST is applicable. Sir, is it an exempt supply? Answer is no. When I read my section, please make a note in your working note. Section 2 within brackets 47. Exempt supply definition. Exempt supply definition. Supply of goods or services which attract nil rate of duty or which are exempted wholly from duty. Sir, Schedule 3, my Schedule 3 is not an exempt supply because it is neither a supply of goods nor supply of services. So it is not called as an exempt supply. The moment it is not a exempt supply, my ITC reversal under section 17 is not required. Friends, examination, please expect a 2 marks. When I'm saying 8 marks is a weightage, 4 marks computation of refund taken care. 2 marks applicability of your import-export provisions in relation to supply of goods which takes place in a customs bonded warehouse. Expect a 2 marks theory question. So you have to draw attention to Para 8A of Schedule 3. Para 8A of Schedule 3, which talks about your goods which are cleared in your customs premises. So by applying this provision, we would say that this supply is not a supply under GST where GST gets attracted. This is an example from this particular definition. Next. There's a couple of questions. One question came from Bharat Kumar Reddy. Import of service from distinct person come under import of service. Answer is yes, Bharat. When the services are imported from a distinct person, in relation to import, they say yes. In relation to export, they say no, it is not to be considered as an export. Answer to your question, Bharat, yes. Raja Amala, Please make available of recording classes. Raja, it is available, ma. Jitin, he has given an answer of interstate supply. Yes. Venkat asked a question. In your example, X, Y, Z and Co. I think you have answered the question, Venkat. Yes. Yes. Okay. Both Jitin and Venkat, please understand this XYZ and Co. When they supply the goods, it shall not. It is an interstate supply, but by virtue of my Schedule 3, it shall not be considered as a supply of goods nor supply of services. So, should I need to report in my GST returns? I would report as a non-GST supply. So, the moment I report as non-GST supply, should I need to pay GST? Should I need to pay GST on that? Answer is no. You need not pay any GST on that. So friends, let me come back to my presentation. Yeah. Now, next question comes. Now here, what is the value to be considered when ABC Limited is clearing the material from bonded warehouse? Now we understood that $15,000 is the price in the hands of XYZ & Co. That material was sold to ABC Limited for a price of say $16,000, right? $15,000 was imported. That later it was sold for $16,000. Now what this provision says, transaction value or the value determined into bond. So when XYZ & Co imported, the value is 15,000. But subsequently, XYZ & Co sold it to PQR Limited for $16,000, whichever is higher. 15,000 or 16,000, whichever is higher, that shall be the value for the purpose of determining or payment of your IGST. High C sale. What is an high C sale? Students who doesn't have familiarity with this particular indirect taxation, who doesn't have come across this transaction, I'll give you a clarity in this particular high C sale. This is a sale which happens in the course of import of goods. I'll give you an example for having a better understanding. There is one company, let me not name the entity. There is one entity which is into import of chemicals. This entity is a sole, what I can say, they are the sole dealer of chemicals. Now, when you play, like I'm talking about stock market, I wouldn't recommend you to go and buy burn your fingers in stock market. But it's good to learn what happens in the stock market. Now, this is one example in relation to the high C sale. Scale of economy. You're going to be a future chartered accountant. Now, when you give an advice to a client, please keep in mind the pros and cons of a transaction. I import a consignment for a sum of rupees, say $150,000. This consignment, if I hold in customs, say for 10 days, I know that this $150,000 is going to become $180,000. Why? There is a correction in the market, global correction. A lot of changes up and down is happening. Every day there is a change in gold. Every day there is a change in your crude oil. Every day there is a change in my foreign currency. Now I'm playing in foreign currency. I'm playing with the global market. I know that this 150,000 is going to become 180,000. Now what is happening here? I have been entering into a transaction when the goods are in the course of import. The goods, before they enter into the customs clearance, before the goods are entered for customs clearance, importer transfers the title to the goods to another person. Now, the goods are shipped from Germany. The value of the goods is, say, 120,000. The goods come by a ship which takes 3 months or 2 months for reaching my customs frontier. Now, the freight of A is 3 times or 4 times compared to my ocean, compared to my sea. So what happened in say April 2020, the ship has started. Forget your COVID moment and all. The ship started in April 2020 from Germany. The moment it reaches my Indian soil, I noticed that 1,20,000 is going to become 1,50,000. Why? Your demand, your scale of economy, your market demand and supply. The market demand is so high that 120, if I'm selling at 150, there's a person who's ready to buy. Now, this is called high C sale, where say I'm an importer. I get into a transaction where I transfer the title to the goods to a person called another person who's willing to buy that material. So here, the importer is transferring the title of the goods to another person. What happens here? I get into a sale agreement. I write a stamp paper. I buy a stamp paper. On the stamp paper, I will say, I, Praveen, being the importer of this consignment. The consignment is coming from Germany. This is the invoice number. This is the quantity. This is the value. And this is the shipper who is getting the material. I, Praveen, transfer the title to this goods to, say, Mr. Ramu. This gentleman is willing to pay me a sum of rupees 1,80,000 for this consignment. 1,20,000 has become 150 or 120 has become 180, whatever it is. The transaction value I'm going to indicate in the contract, and I say this transfer happened to this gentleman, and this gentleman called Mr. Ramu can get the goods clear. This concept, friends, I call as high C sale. Now, the difference between this example and the previous example. In the previous example, the goods have entered into the bonded warehouse. I've kept in the bonded warehouse. I've been playing with the goods in the bonded warehouse. Now here, I don't do any bonded warehouse. Before it reaches my customs frontier, I have transferred the title to the goods. So when the goods are in high territorial waters, that is the 200 nautical miles, it has not hit into my territorial waters. That is a point in time where I'm transferring the title to the goods. So the buyer here, the Ramu is the person who's going to file the bill of entry. Reference to Schedule 3, Para 8B. Para 8E, the previous example, bonded warehouse. Para 8B, high C sale. So in case Praveen is selling the goods for $1,80,000 or $1,50,000 to Ramu, then they say this is neither supply of goods nor supply of services. Since the transaction has not taken place in India, they say this is a high C sale, and they say no GST is applicable on this transaction. Friends, I draw your attention to this again. My previous example, I have been playing around in a customs bonded warehouse where I file into bond, in TO2, into bond. I get the goods into bonded warehouse. In this case, before it reaches my customs frontier, I transfer the title to the goods to my buyer. That's called high C sale. So in relation to high C sale, my Para 8B of Schedule 3 says, boss, it is not subjected to GST law. So examination, 2 marks question, if the supply happens within a bonded premises, if the supply happens by way of a high C sale. This is what we need to answer. Value for determining duty should be price actually paid by the last high C sales buyer. Now in this case, Ramu, assuming Ramu pays me $1,80,000, that $1,80,000 will be considered with the customs authorities for the purpose of valuation, for the purpose of determining my duty. So what they say, in between, if there is any margin, if there is any commission paid by the last buyer, now it can happen, A sells to B, B sells to C, C sells to D. The last person who files bill of entry is D. So the margin of A to B, B to C, C to D, all these 3 people's margin shall also be considered by the customs authorities for the purpose of determining value under section 12 of my Customs Act 1962. Now, valuation under customs, I'm not touching. Please wait for the custom session to start. As of now, for you to understand, in relation to high C sale, my Schedule 3, Para 8B, 8A, your bonded warehouse, 8B, high C sale. It is neither supply of goods nor supply of services. The moment I say it is Schedule 3 item, ITC reversal, I need not do. Reason, it is not a exempt supply. Now, supply of goods without actual import. This is one example where I would draw your attention. You, as a practicing chartered accountant, is going to come into this particular scenario where the client comes to your office and says, Praveen, please explain me how do I deal with this transaction? Income tax, GST, I don't want to any litigation. I don't want to have any tax exposure. Reason, this is an international trade. This is an international trade where I don't want to get into any of the clutches called confiscation, fraudulent activity, tax evasion. I don't want to get into that. This is how this transaction is netted, which is called international transaction. There's one small dot. Let me take the question and come back. Raman says, one person in India transfer warehouse goods to another person in India. Whether this person charges GST when sold. Raman, this is what we have discussed a while ago. When it is a transfer within the bonded warehouse, then Schedule 8B comes into picture where they say, no, it is not a supply at all. It is not a supply at all. Schedule 3, para 8, clause A. 8A talks about your bonded warehouse, 8B talks about your high seas sale. Then there's one more question. Please explain 89 4A 4B. Raman, there is a concept called deemed exports. Wait for that. Once my deemed exports is explained, I'll come to your 89 4A, 89 4B. Now, coming back to my slide. This is a transaction which is a international transaction where this client says, look, there is a tri-party commercial transaction. What is that? This is a trade which is governed in an international transaction of purchase and sale. Now, Mr. A, who is in India, this Mr. A is going to be a connector, means is going to get into international trade, is going to get into international trade, who's connecting the seller, who's also connecting the buyer. Now, this is what majority of the HNI, high net worth individuals, does in a regular practice. People who have worked as a country manager, sales manager, area manager, Asia Pacific manager, these are the people who play in a large scale. Now, this is one transaction from that particular point of view. Now, let us understand this transaction. Mr. A, who is in India, he has got hold of ABC Incorporated, which is an entity which is there in USA. ABC Incorporated is an entity who wants to buy some goods. Now, Mr. A has identified another entity called XYZ, who is a supplier. Now, please understand, there are three parties here. Party A, who is in India, buyer, who is there in US, seller, who is there in Japan. This XYZ doesn't know ABC, ABC doesn't know XYZ. Now, ABC is placing order on A, saying that please supply goods worth so much of value. ABC says, please supply goods worth so much of value. What will happen? A will raise an invoice on this entity called ABC. In turn, this A gives a direction to XYZ, please supply the goods from Japan directly to USA. From Japan coming to India, from India again going back to US, logistics, your clearances, provisions, and your overheads. Considering all these things, they say, A says, XYZ, please ship the material from Japan to US called ABC. Now, actual supply is happening from Japan to US, and the bill for that supply is happening from A to ABC. Now, this transaction is called as a non-GST supply. Attention to Schedule 3, Para 7. Now, Para 7 of my Schedule 3 says, this is not supply of goods nor supply of services. For the simple reason, the goods which is there in this transaction, it is not coming into India and going out of India. Now, why should I tax this gentleman A? A should not be taxed in India under GST, under indirect taxation. A need not report that as a export of goods nor export of services. A cannot say that is a import of goods nor import of services. Look at the way the transaction is done. From Japan, goods does not enter into India. From Japan, directly goods go into US. So from A's perspective, A need not declare that it is an import. A at the same time cannot declare that as an export. Why? When it is not touching my Indian soil, I cannot call that as a import or export into India or out of India. Rather, my Schedule 3, Para 7 says, this transaction I call as a cross-border transaction, which is neither a supply of goods nor supply of services. So when it is neither a supply of goods nor supply of services, no GST is applicable. Assuming A is going to raise an invoice on ABC Incorporated for a sum of rupees 1 lakh USD, 1 lakh USD. By no means, by no way, the authority, assuming that Mr. A is registered in the state of Kerala, just because Mr. A is registered in the state of Kerala, the state officer or central GST officer cannot demand A to pay GST on that 1 lakh. They cannot say, Mr. A, because you are doing a transaction, you have not got a LUT, you have not got registered under GST. All these transactions, all these aspects cannot be questioned on this gentleman. So why are you saying that? You're saying 1 lakh US dollar. If I convert that into INR, assuming that it is worth 80 lakhs transaction. In the state of Kerala, my threshold limit is 20 lakhs. The moment the threshold limit crosses 20 lakhs, you're saying that there's a threshold registration under section 22. Friends, students, please keep in mind, my schedule 3 says this transaction is neither services. When I talk about registration, my registration comes into picture only when there is a supply of taxable goods or services. I'll draw your attention. Let me go back to my Excel. To make you clear with this transaction. In this example, Mr. A is in Kerala. The value of supply is US dollar 1 lakh. Assuming 78 is my conversion rate. The value of supply in INR, 78 lakhs. Now, question comes here. Sir, is it required to get registered under section 22? Now, the state officer of state GST officer, can he give a notice to Mr. A saying that, look, the threshold limit is rupees 20 lakh. Since you have exceeded the threshold limit, you are not registered under GST law. I am going to penalize you for this particular activity. One, you are not registered. Second, you are not filed your returns. Third, you are not obtained LUT or bond. Fourth, you are not disclosed this transaction anywhere in your GST returns. Can all these offenses be brought under Mr. A? Simple answer for that. When I talk about my aggregate turnover, section 2, clause 6 under GST law, aggregate turnover, please keep in mind, my aggregate turnover includes taxable supply, exempt supply, which includes your non-GST supply, non-taxable supply, and supply on which tax to be paid on RCM, and interstate supply having same PAN. Now, this is what we need to understand from aggregate turnover. This transaction, when it is referred as per Schedule 3, heading says neither a supply of goods nor a supply of service. Now, please keep in mind, it is not a supply at all. Unless it is a supply, I cannot bring into my aggregate turnover. So my threshold limit is applicable when supply of taxable goods or services exceed the threshold limit. In this case, because Mr. A is making a transaction from the state of Kerala, I wouldn't call that it is a taxable supply. The moment it is not a taxable supply, it does not come into my aggregate turnover. The moment it does not come into aggregate turnover, registration, filing of returns, obtaining a prior permission, LUT, bond, everything is squashed off. So this is my answer to this particular concept of your transaction where there's a international supply. Now, next aspect is imports as baggage. This is one small concept. Again, examination, expect the unexpected, 2 marks theory question. In relation to baggage, my GST law says that baggage is a item which is your personal belongings. Baggage is your item which is your personal belongings. Under customs law, they have defined what is your baggage, what is permissible under baggage, what is the value of consignments you can get as a baggage. So, whenever there is a baggage, this baggage is exempted from payment of IGST as well as compensation. Under my customs law, basic customs duty is applicable at the rate of 35% along with social welfare surcharge. This is taxed only when the value is exceeding my permissible baggage free allowance. Like example, under your personal baggage, when we read your customs law, cigarettes which are carried, there is a length, there is a value, up to some amount, they are permitted to carry cigarettes, jewelry, used personal items, laptop. There are a couple of items which are exempted from levy of customs duty. So if there is exceeding that particular limit, they say, look, there is a customs duty applicable, but not my IGST. Next, we move on to next aspect called import of service. Before I go further, let me see if there are any questions on this further. Okay. Next aspect called import of service under GST law. My section 7 of CGST says that import of services for a consideration, whether or not in the course of furtherance of business. There's one question from, let me see the boy's name. I think Bharat Kumar Reddy. Yeah, Bharat, your answer starts from here now. My GST law, if you look into my GST law, section 7, which talks about your supply. Under section 7, clause B, it says import of services for a consideration, whether or not in the course of furtherance of business. It is called as a supply. Here, import of service is important. What it says, for a consideration, whether or not in the course or furtherance of business. No. Here, section 7 says, whenever there is an import of service, it is called as a supply. Now, please keep in mind, it is not a complete statement. It is giving a fact saying that when you import a service and when there is a consideration, whether that service is used for a business or not for a business, it is called as a supply. Now, they are defining what is a supply. I'll give you a couple of examples. Sir, I'm an individual. I'm doing my CA final. I wanted to buy a particular software. For developing a particular accounting software. I am more interested in making the business easy. Like e-invoice is one concept. Sir, after e-invoices come into picture, I'm more tech savvy. So I want to develop a auto accounting updation based on e-invoice. The moment e-invoice is read into my system, my accounting entry, debit and credit automatically happens. So some software you are developing. Now here, You as an individual, you have imported the service. When you have imported the service, there is a free import, there is a paid import. Many of the softwares have free import, which comes with a lot of junk and virus. Now you don't want to take a risk. You wanted authenticated, the patent licensed thing. Reason you're developing a software. When you want to showcase that software, the government does some test checks. You should have a genuine software that should be authenticated. Then only they will encourage you. So I have imported the service for a consideration. Means I paid money for that, whether or not in the course of furtherance of business. When I'm doing a development activity, I'm not sure it could be converted as a business model, or it is just a research and development for my interest. Now here comes whether or not in the course of furtherance of business. Section 7 says import of service, and there is a consideration for that import that shall be deemed to be a supply under section 7. So this is one aspect in relation to import of service. Now, reference to para 4 of schedule 1. Import of services by a person from a related person or from any other his establishment outside India in the course of furtherance of business. Bharat D, your question is answered here, ma. When I have a related party transaction, when there is a distinct person transaction, my import of service is happening by a person from a related person who is considered as another establishment who is there in India, outside India. So there is a head office in, I would say, Karnataka. Take example of this brand called Sarvana Bhavan. People who are from North India, I'll give you an example for this. There's a hotel called Hotel Sarvana Bhavan in Tamil Nadu. This hotel is well known for its food, the quality of food. Like we have MTR in North India, we have this Sarvana Bhavan in say South India. Sarvana Bhavan has got a branch in Singapore. There's a hotel called Sarvana Bhavan, head office in Chennai, has got a branch in Singapore. The branch in Singapore has bought a license, has bought a software in Singapore that is very easy for inventory management. The Singapore branch has transferred the right to use license by installing in the head office in Chennai. Now that's a point. Bharat Reddy, your question comes here. Reference to para 4 of schedule 1. Schedule 1 talks about supply between distinct persons where there is no consideration. So when I read my section 7 clause B, consideration is must. Now, in case of a related party transaction, in case where there is a establishment of same entity, same distinct person, import of that license from Singapore to India, Chennai, in the course of furtherance of business, is deemed to be a supply under section 7. The moment I say it is a supply, it is called import of service. So friends, when I read my schedule 1, if there is a transaction between distinct person, I call that as an import of service. Next. Section 5 of IGST Act, which says there is a levy of IGST, all interstate supply of goods or services. So when there is an import of service for a consideration, when there is an import of service for not for a consideration, these both things together, when I read together, I call that it is an interstate supply. So why is it important? Now, please understand, the lawmaker is trying to make his point very clear. I repeat, the lawmaker is trying to make his point very clear. What is he trying to do? He's trying to identify a business transaction where a supply can take place, for a consideration. Supply can take place not for a consideration, either for a consideration or not for a consideration. The moment there is a supply, this is a place where supply is there for a consideration. This is an example where supply is there not for a consideration. So these two things together, my section 7 says, look, sorry, section 5 says it is a interstate supply. The moment it is an interstate supply, there is a levy of IGST. There is a levy of IGST. So friends, keep in mind, the moment there is a import, either for a consideration, not for a consideration, my section 5 of IGST Act comes in to say, look, it is a supply. The moment it is a supply, you are supposed to pay IGST on that. So this is one aspect we need to keep in mind in relation to import of services. Sir, I have understood what is an import. Having understood what is an import, sir, who is the person liable to pay tax? Who is the person liable to pay tax? Now, this question is answered in this particular slide. What it says, in relation to import of service, where wherever there is import of service, other than non-taxable online recipient OIDR service, recipient who has imported the service. Let me put my annotation here. Yeah. Recipient other than non-taxable online recipient. What they say, in relation to import, the person who has imported, I shall hold that person as a person liable to pay tax on reverse charge. I'll hold that person as a person liable to pay tax on reverse charge. I'll give an example. Sir, I'm a chartered accountant, aspiring chartered accountant. I've imported the services of Google. I paid a sum of rupees 5,000. Should I pay tax on RCM? Please read this carefully. Other than non-taxable online recipient. Who is a non-taxable online recipient? Just a while ago, we read this definition. 5 people, government, local authority, government authority, person, or any other person, individual, or any other person who are not registered, receive the services other than for business, commerce, or profession. Then I shall be called as non-taxable online recipient. In case of this OIDAR, I will not pay tax. Who will pay tax? The service provider, OIDAR. The fellow who is supplying that service, that fellow will pay tax to Government of India. In case if that service is by a recipient, who is registered under GST law, that registered person shall pay tax on RCM basis, right? Next. In case of services supplied by a person located outside India, Bharat, you answer your question. In case of services supplied by a person who is located outside India, by way of, sorry, this is another point. This is in relation to transportation of goods by road, by vessel. Not that important. This I'm going to talk to those students who are well versed with GST laws in internship. Transportation of goods by a vessel from a place outside India up to the customs station, clearance of India. IGST is to be payable by the importer. Now, in general, I'll explain to other students. This provision under section 5, there is a notified list. In the notified list, the government has brought in a notification 10 of 2017. Don't worry with the notifications and other things. What it says, in relation to material, the goods which have imported. So when I import the goods, my import happens through A, my import happens through C. When the import has happened through A, they're not talking anything. If the import is happening through a vessel, from a place which is outside India till the customs station clearance in India, they're saying the freight paid from the place outside India till the customs India. Now this gap, the freight which I'm going to pay, this is a ocean freight. I call ocean freight, air freight, ocean freight. Air freight I pay to the airport, the carrier of airlines who get the goods. My ocean freight I pay to the vessel, I pay to the ship who carries the goods. Now they say in relation to that ocean freight, you pay tax on RCM. Now this is one disputed litigation provision where importer, there's one entity called Mohit Minerals in the state of Gujarat. What they have pleaded, my lord, when I get the material imported into India at customs, when I refer to section 3, read with section 12, they have defined a mechanism, CIF, my cost, insurance, freight, till the customs station. I repeat, till my customs station, already I'm paying customs duty. On that customs duty, I'm paying my IGST. So when I paid my customs duty, when I have also paid my IGST, again, the GST authorities are asking me to pay tax on reverse charge. Now, this principle, I draw your attention to Article 269A read with Article 269. Authority to collect tax, authority to levy a tax. Once you have levied a tax at customs, there is no authority for you to levy a tax again indirectly asking the registered person to pay tax on RCM basis. Because a tax can be collected once on a transaction. A tax cannot be collected twice from the same person on the same transaction. Here, the importer, you're asking him to pay tax at customs on CAF basis. Once the material have come into your factory, again you're asking him to pay tax on RCM. Same transaction without any valuation, you're asking him to pay twice, which is unconstitutional. Institute Metal has drawn attention to this Mohit Minerals case, where they say no need to pay tax on that particular supply. This is in relation to your import of ocean freight. In case of importation of OIDA services by a non-taxable online recipient, whoever is a supplier of that OIDA service, he is liable to pay IGST. So friends, when we talk about import, in the previous slide, we have understood when an import is going to take place, for a consideration, not for a consideration. If I say there is a consideration, who is the person liable to pay? If I say there is no consideration, who is the person liable to pay? In case of OIDAR, Online Information Data Access Retrieval Service, the person who is rendering the services to a person who is a non-taxable online recipient, in that case, the service provider, either he himself directly or through his agent, through his intermediary, should register in India and pay tax. So when you're talking about OIDAR, is it state-specific registration? Answer is no. In India, only one registration will be given, this OIDAR. So when they import that service, they are supposed to pay tax on RCM. I draw your attention to this website called, there is one service provider like Google. When we buy this website, I have choice to buy website domain, web domain, like say praveen.in, praveen.com, praveen.org, praveen.ca. There is a domain which we need to buy. So when I buy a domain, that particular service provider, he will check. If you are registered and you are giving GST, and he will not charge GST. If you are not registered, then he himself will charge 18% GST on the bill. So this is in relation to your OIDAR. Now let's move further. Exports zero rated supply. This is a hardcore topic. Last session, Venkat, Jatin, Raman, couple of other students have raised multiple questions in relation to zero rated supply. There's one more student who asked, sir, what is your LUT in relation to zero rated supply? So this slide, I'm going to explain you in detail your concept of zero rated supply. Examination, important. More than exam. Once you come into our industry, once you come into practice, a must read through for your complaints print. So let me make you clear with this principle. Section 16 of IGST Act talks about this zero rated supply. They say zero rated supply means any of the following supply of goods or services. So when I say zero rated, it means supply of goods or supply of services. What is that? Export of goods or services or both. So what is an export? We have understood the definition of export. Goods which are going out of India, services which are rendered outside India, or services rendered where the place of supply is outside India. Service provider is in India, place of supply is outside India. In relation to goods, the goods which have been taken out of India, or supply of goods or services or both to a SEZ developer, SEZ unit. Friends, don't confuse. Please go with me. Who have already studied it, this provision, Go with me to understand carefully. If it is export, zero rated supply. If it is a supply of goods or supply of services to whom? SEZ unit or SEZ developer, then I call that as zero rate supply. Questions here. Sir, I have exported goods which are exempted. Sir, I have exported services which are exempted. Sir, I have supplied goods to SEZ unit which are exempted. Can I call them as zero rate supply? Answer is a big yes. Reason they say zero rated supply means the following. What is that? Export of goods or services. They didn't say export of taxable goods or taxable services. Export of exempt goods or exempt services. They didn't say anything. They just said export. So I believe Venkat and Jatin are the people who have asked this question. Please read carefully. They say supply of goods, export of goods. They didn't say exempt or taxable. Whatever rate of tax, is it exempt supply or is it taxable supply? The moment I export the goods, it is called zero rated. The moment I supply the goods or services to SSA, it's called zero rated. So this is first catch you have to keep in mind. Benefit and restriction of input tax credit. Now, they say subject to provisions of 17.5, subject to provisions of 17.5. That means to say, when you're making a zero rated supply, they are talking from supplier point of view. Look, you being a supplier, you take input tax credit. However, when you read section 17, subsection 5, there is a list of restriction. That restriction is even applicable to zero rated supply. Like example, there is something called catering service, supply of food to employees in a canteen provided in a factory, or there is something called transportation of a passenger using a motor vehicle. So whatever list of the input or input services restricted under 17.5, like example works contract, they say though you are doing a zero rated supply, I'm going to withhold ITC. Which is restricted under 17.5. So friends, just keep in mind, when we talk about a supplier who is an exporter or who supply to SEZ, that supplier has a restriction of ITC under 17.5. This is one point you need to understand. Credit of input tax may be availed for making zero rated supplies, notwithstanding that such supply may be a exempt supply. Now, this is the eye opener for your ITC availment. I'll take you to my Excel file to make you an understanding on this thing. Now, particulars, assessable value, tax rate, tax paid, nature, remarks. Particulars, purchase of goods. So I'll put this purchase of goods meant for domestic supply. Purchase of goods meant for domestic supply or for taxable. Purchase of goods meant for domestic supply, outward supply, exempt. Here I'm saying outward supply is taxable. Here I'm saying outward supply is exempt. Purchase of goods meant for purchase of goods meant for zero rated supply. I would say zero rated supply or outward exempt. Now, in scenario 3, what I'm saying, scenario number 1, I'm purchasing goods which is meant for domestic supply. Outward is taxable. I buy goods and I sell locally. My outward is supply taxable. Second scenario, I buy goods which is meant for domestic supply, which is exempt. Means when I sell those goods, it is not taxable. Purchase of goods which is used in a manufacturing activity, the output is meant for zero rate supply. My outward supply is exempt by virtue of an exempt notification. Now, when I purchase, I'm talking asset value. Say I have purchased goods worth 12 lakhs. I'm purchasing goods worth 12 lakhs. Say it is taxable at the rate of 18%. I'm purchasing a goods worth 24 lakh. Here I'm purchasing goods worth say 18 lakh 50,000. This is taxable at 12% and say this is taxable at 18%. Now, tax paid now. Here, friends, I'm saying that scenario 1, my outward supply is taxable. Scenario 1, my outward supply is exempt. Scenario 3, exempt supply under zero rate route for export. So, first scenario, I'm saying that my purchase, whatever I'm doing, it is used in an outward supply which is taxable. Now, on my purchases, I'm paying a tax of 2,16,000. When I paid the tax of 2,16,000 and my outward is taxable, can I take the ITC? Answer is yes. ITC is available. Second question. My purchase is made, it is in turn made as an outward supply, where outward supply is exempted. Now here, I purchased various goods. I did an activity and which is supplied for a particular customer which is exempt. Like example, your ISRO. When I purchase goods from a particular supplier, my supplier is charging GST to me. That particular supply, when I have supplied to ISRO, by virtue of exemption notification, it is exempted. So here, because my outward exempt is supply, no ITC is available. No ITC is available. Now, scenario number 3. Scenario number 3, this is a peculiar scenario where I purchase goods which are taxed, are used in a manufacturing activity. The output which is manufactured has been exempted under GST law. Now that particular goods are exported without payment of tax. Now question comes, can I claim ITC? Answer is yes. ITC is available. Now, friends, please keep in mind, the moment I make a zero rated supply, as I said clearly to you, it doesn't say export of taxable goods, export of exempt goods. It just says export of goods or services, right? Similarly, with respect to ITC, my section 16 clearly says, look, except your section 17(5), rest all you can take ITC. Now here, my those goods are actually meant for zero rate, that is export out of India. I'll put it in brackets. Third scenario, export out of India. The moment I say these goods which are purchased, manufactured, are exported out of India, the tax which are paid, the 3,33,000, I can take as an input tax credit. This is my scenario number 3, right? Let me go back to my presentation. Now, so section 16 says, whenever you're doing a zero rated supply, except the exclusion which is there in section 17(5), all other cases you can take input tax credit. The question comes here. So when I'm making zero rated supply, that zero rated supply, ideally within the domestic market, when I sell those goods in India, those are exempted. Now the same goods when I export out of India, Can I call that as a zero rate? Can I take an input tax in relation to that? Answer is a big yes. I'll give you one example straight away here. Example of your rice and agricultural produce. There is one entity in Tamil Nadu. This entity purchases all agriculture produce. They do a packing activity without a brand, like rice 10 kgs, your vegetables relevant for the something, atta. When they do a particular packing and they export that consignment to Sri Lanka. I repeat, this one entity in Chennai, that entity purchases all agriculture produce. They make a bundle of that agriculture produce and they export to a country called Sri Lanka. Now, when they export, that is called zero rated supply. When I buy agriculture produce, all of them are exempted. But when there is something called transportation charges. When they pay transportation charges, GTA comes into picture. By virtue of my section 24, a person who is liable to pay tax on RCM should get registered. So this gentleman, he pays tax on RCM. Now, those agriculture produce, when he is exporting, the law says he can claim the benefit of ITC. So what this gentleman does, he takes the benefit of that ITC, what tax he has paid on RCM, and he files a refund application to get that as a refund into his bank account. That is what they say in relation to support of zero rated supply. Next question comes. There is one more question which one of you asked. I don't remember the name. Let me go back to your Excel file. The question asked here is, sir, I know that it is exempt. Still, can tax be paid on exempt supply for a zero rated route? Sir, the rate of tax, when I have to pay tax, I need to refer into the tariff which is given. As per my tariff, the rate of tax is nil. When I'm making a zero rated supply, can I pay tax? Answer to that question is no. When the tariff itself is rate is nil, you cannot pay tax on that when you are making a zero rated supply. Answer to that question. Next. When I'm doing this particular zero rated supply, they have said reference to LUT or bond, either of the following options. Refund under LUT or bond under either of the following options. What they say? The supplier, he may supply the goods or services both under LUT or bond, subject to such conditions, safeguard procedures may be prescribed without payment of IGST. So when I'm making a zero rated supply, exports out of India, supplies to SZ, I have been given an option not to pay IGST. When I say not to pay IGST, a compulsory obtaining LUT or bond, or he may supply goods or services or both, subject to such conditions, safeguard and procedures as may be prescribed on payment of integrated tax. Now here, I draw your attention to this term called under bond or LUT, without payment of integrated tax. Similarly, on payment of integrated tax and claim refund of such tax paid. Now, the law says, look, when I say zero rated, the intention is goods are going out of India. When goods are going out of India, I want to ensure that you do actual export without payment of tax. Now, for that, you have to obtain LUT or bond. We have discussed what is a LUT or what is a bond. Sir, I don't want to use the LUT or bond. Rather, I want to pay the tax and claim a refund. Now here, please understand. Now, this is a particular route where it is falling under accumulated input tax credit. This is a route where my input tax is not accumulated. I pay a tax and claim a refund of that automatically. Route 1, I obtain a LUT or bond, file a refund application for refund of accumulated input tax credit. I repeat, Route 1 is a mechanism. I export the goods, I supply the goods to SSZ unit or developer, I supply the services to SSZ unit or developer, where I obtain a LUT or bond. Once I have LUT or bond, no need to pay IGST. So it is a simple mechanism. You do the services, get a certificate that this is for authorized operations. Once you give a certificate, I'll give you a refund of your accumulated ITC. Route 2, they say you are permitted to pay the tax and claim a refund. So why you are paying tax? Because this is an automatic route. Route 2 is an automatic route. Route 1 is an indirect route. Now, if you look from the administrative point of view, I have to export, get the documentation, go to the authority, file an application, get it processed. In Route 2, the moment I export, I pay the tax for goods, automatically within 45 days, I get the refund in relation to goods. In relation to services, the moment I get the foreign currency, file an application, get that money paid back. So Route 2 is a simple route. Route 1 is a cumbersome route. This is what I have to understand with respect to zero rated supply of goods or services. Next. Now, this is one slide. This is one slide which explains you the difference between your exempt supply and zero rated supply. My exempt supply, which is attracting nil rate or exempt from tax. Zero rate, it is a simple export of goods or services or supply. It doesn't say export, taxable, etc. Next, exempt supply, no tax is paid on outward supply. However, when I purchase, my supplier charges taxes to me. In case of zero rated supply, there is no tax on outward supply. When I say on payment of IGST, look, I'm not going to collect from my customer. I'm going to pay IGST to government and government is going to give that money into my bank account. Please keep in mind, zero rated supply. Look into your balance sheet. In balance sheet, current asset, ITC, accumulation of ITC. I pay that tax to government. When I say payment of tax, the tax is paid to government so that government gives a credit into my bank account. So this is my zero rated category. In case of exempt, I don't collect any tax. Next, exempt supply, no ITC is eligible. I cannot take. We have looked into a couple of example files. In case of zero rated supply, I can take the benefit of ITC subject to that 17.5. In case of exempt, when I'm doing partial rebating, when I have read Rule 42, Rule 43, input tax credit, when I have to reverse my input tax credit in relation to common input or input services, my outward exempt supply includes my exempt supply. In relation to partial rebating, zero rated supply is part of my taxable supply. That means I need not reverse any ITC. In relation to exempt supply, any person who is dealing with exclusively exempt supply not required to register. Zero rated, section 24, compulsory registration. Next, deemed exports. Now, this is a concept under GST law. This is a concept under GST law where goods actually does not go out of India. Rather, I supply the goods to EO unit or the goods are given under advance authorization. As of today, the goods which are supplied under advance authorization or EPCG or to EOU shall be called as my deemed exports. So what is the mechanism of deemed exports? Under deemed exports, either the supplier will claim the refund or recipient will claim the refund. Now, this tax is applicable for the outward supply. Raman, you've asked a question for Rule 89 4A 4B. Answer to your question, Raman, in case of deemed exports, they have given a formula. When you're a deemed exporter, you examine like who is claiming a refund. If the supplier is claiming a refund, he can file a refund application, claim a refund. In case of a recipient, they have given a formula under 4A, 4B. I'll come to that formula at a later point in time, depending on the time availability. Now, merchant export, this is one concept under GST law. Friends, bear with me, another 5 minutes will wind up. Merchant export is one mechanism where government says, under this route, the manufacturer does not export the goods out of India directly. Rather, there will be another person called trader. The rate of tax under merchant exports is 1%. That means manufacturer will charge instead of regular rate 1% to whom? The trader. Manufacturer, trader. Trader is the person who is going to export the goods out of India, right? So here the rate of tax under the GST law is 1%. I have given the various procedural aspects. I'll skip this for point of time. It's a very simple method under export. Now, export of services, it says Service provider is in India. The service place of supply is outside India. Recipient is also out of India. When I receive the money in convertible foreign currency, then I call that as export of services. The exception to this, Nepal and Bhutan. In case of Nepal and Bhutan, even if I don't receive money in foreign currency, it is deemed as export of service. What if there is an export of service between a tri-party arrangement? Say there is a supplier who's in India, there is a recipient in US. Now, this recipient in US needs a service where I need to depend on another person called a person in Germany. Now, this recipient places a supply order on Mr. A for 10 lakhs. A says to Mrs. L saying that please you render the services to this US entity for a sum of rupees 2 lakh. Now, question comes here is this 10 lakhs instead of US client paying to Indian person, can 2 lakhs directly paid from US to Germany? Answer is a big yes. Now, for the purpose of GST, should I call 10 lakhs as export or 8 lakhs as export? The law has clarified that as long as the recipient in India who is paying a tax on reverse charge basis and is getting the permission from this RBA to net off that, it is deemed to be a export out of India, which is export of service. What is the value? 10 lakhs. LUT bond we have discussed. I'll take 1 minute before we wind up. Friends, this is one particular topic called export or import. As I draw your attention to beginning of the session, please don't take it as a complicated session. Please understand the concepts and the logic behind this particular thing, which is linked with my customs authorities. So when we read our customs provisions read with BGFT, you'll have a better understanding of this particular aspect. Hope I have clarified these aspects on import and export under GST law. With this, we come to the conclusion, end of our today's discussion. We meet again this Saturday. We don't have a session. So coming Tuesday on 9th, we will meet again to discuss further. Till then, goodbye and see you all.